Globally, central banks have printed $20 trillion in the last 2 decades that they are willing to make public. Each dollar printed devalues the rest, diluting it. Today we have markets that have completely correlated with central bank intervention. So what will be the effect of reducing their money printing? Rising markets? I don't think so. You came here for the truth, so let me unveil that for you. Today we're going to look at the ECB and the effect of their actions. Let's begin with this. APP monthly net purchases by program. So this is their asset purchase program, and there is a lot, as you can see. PSPP, ABSPP, CSPP, CBPP3. It's the whole alphabet and more. And that's not meant to confuse anybody. Their program is very simple. Let's buy the things nobody else will. That's what it is. A lot of people deny that, especially those in the financial industry, especially those who have investments here within Europe that they are buying up. And so they have a reason to feel that way. Totally understandable. So what we can see here is that the amount that they were purchasing has declined, and they intend on bringing this down quite significantly over the next few months and into the next few years. There is a whole host of different programs, what they have been buying here and where they will go. Well, obviously, it's going to change. But at this time, we can see what they have been getting themselves into. They generally buy the worst of the worst. They will continue to be a source of demand for duration risk through reinvestments. ECB monthly sovereign purchases under the PSPP and GS projected monthly reinvestments. What I'm noticing here is that previously this was all the PSPP, and I'll show you that in a moment, but this will then lead into all of these different programs. And that's going through the reinvestment, all these different countries here that you can see on this list, whether it is Italy, Spain, and others here. Big changes will definitely be occurring with the ECB, and what they expect is that somehow inflation will continue to keep going higher. They have a very big problem at this time that their deflation is really becoming a burden on them. They need more inflation. They've been printing up literally tens of billions of dollars every single month, and they still cannot create inflation. It's really amazing to see the effect, how far they have gone, and yet still no effect where they desire it. They have been buying everything. They've been buying toxic debt. They've been buying corporate bonds. They've been buying pretty much anything that's available. And a lot of that is unfortunately not exactly something that they would be able to profit from. I'll show you more about this in a moment. Implementation aspects of the public sector purchase program, that is the PSPP. I showed you that. And you could see that we have definitely been seeing the ECB using this PSPP for the majority of their purchases. In its implementation of the public sector purchase program, the Euro system intends to conduct purchases in a gradual and broad-based manner, aiming to achieve market neutrality in order to avoid interfering with the market price formation mechanism. This was written back in January of 2017. I just wanted to show this to you specifically because they say they're trying not to interfere, but in fact that's exactly what they're doing. If they would allow the free market to take effect, everything would have tumbled down. You would have had a collapse already, but they go in there and they start to buy up the corporate bonds of these companies. They are effectively bailing out all of the corporations that they are able to. Basically every single one, and especially those major corporations that you know. The big names. Then we have this effect which is unsustainable. Okay, they have been buying up everything, all different types of debt, including, and I want to highlight this now, that which is negative yield, guaranteed loss on the investment. They've been buying that up also. What does this do to the market? What does it signal? If they're going to say we are going to buy every single month, let's just make something up, we're going to buy $10 billion worth of corporate bonds in Italy. What does that tell the market of Italy? Well, surely we've always got a buyer. We've always got $10 billion worth being bought in Italy. Therefore, we can expect that the effect of which on the market will be this. Now, the market has priced that in. They've been pricing in 10 billion a month in Italy. Suddenly, if that becomes 5 billion, what does that do to the market? Well, you signal to the market half as much of the purchases coming from the ECB. Will there be another buyer to make up for that 5 billion? Maybe. Maybe not. What's going to happen 6 months later? Well, that 5 billion is now going to shrink to 2 billion. Okay, are you going to be able to make up for that 8 billion shortfall? And of course, the answer is no. This is why I suggest to everybody that the ECB is about to trigger the global economic collapse in the event they stop printing money. They're going for it. We'll see how they handle it. Interest rates in many countries in Europe are in the negative territory. Japan's doing it. Globally, though, interest rates are near record lows. We can see them rising in a couple small examples like Canada and the US, but they're still near record lows. They need to come up to higher levels to maintain stability in the markets. That's in the long term, of course. If you want short-term gain, well, just bring interest rates down to zero, but it's not. It never allows for stability. When the market sees an interest rate of zero, it doesn't know how to react. It doesn't know how. And that's what they have completely messed up right now. Okay, I'm going to touch on a whole bunch of different points here. I'm going to go through Europe, but I'm going to connect that into a whole wide variety of issues. I know I shouldn't say a lot of people, but there are a small handful of people that don't like when I do that. So if you're done with the video at this point, I just want to thank you for your time, and I'll just continue on with the rest of the video. Don't go anywhere. Stay tuned for part 2 of this video. I'm going to get into so many different issues. Click on the link in the description, and I'll see you there.